The white picket fence. The two-car garage. The home you could finally call your own. For generations, that dream felt like a promise. It was supposed to be the reward for hard work, the foundation for a family, and the main way to build wealth in America. But what if that promise was sold right out from under you? Imagine you've saved for years, done everything right, only to be outbid on your first home by an invisible, all-cash offer from a company you've never heard of. You're not alone. It's a reality for countless Americans. In fact, in some of the country's hottest markets, investors are snapping up more than a quarter of the most affordable starter homes. The American dream wasn't lost, it was sold. This is the story of how Wall Street systematically bought up American homes, turning family neighborhoods into financial assets. Our story really kicks off in 2008 with the collapse of the global financial system. The housing market, which had been fueled by risky subprime mortgages, completely imploded. Foreclosure signs littered streets like fallen leaves. Millions of families lost their homes, and the market was suddenly flooded with distressed properties. This historic catastrophe created a sea of cheap real estate. For Wall Street, still reeling from a crisis it helped create. This wasn't a tragedy, it was a fire sale. While ordinary Americans were locked out of a frozen credit market, private equity firms and hedge funds saw a once-in-a-generation opportunity. They started buying up the wreckage at a massive discount. And they weren't just planning to flip these houses. They had a much bigger, more permanent vision. They were going to become America's landlords. So, how did they pull it off? It started with a helping hand from the US government. Facing a tidal wave of foreclosures, government-backed entities like Fannie Mae needed to get properties off their books fast. They launched programs to auction off thousands of homes, not one by one, but in massive bundled portfolios. The only players with enough cash to bid on these bundles were large institutional investors. The private equity giant Blackstone, through its subsidiary Invitation Homes, became a dominant force. They weren't just buying a few houses. They were acquiring entire neighborhoods at a breathtaking pace. Backed by billions in capital, they could make all-cash offers, closing in days and crushing any competition from families who needed a mortgage. This strategy spread across the Sun Belt, targeting cities like Phoenix, Las Vegas, and Tampa. By the early 2020s, the numbers were staggering. Investors were buying nearly 1 in 5 homes sold nationwide, a share that jumped to over a quarter for the most affordable homes. The path to homeownership for first-time buyers was suddenly blocked by a Wall Street toll booth. Owning tens of thousands of scattered single-family homes should have been a logistical nightmare. But Wall Street does what it does best. It financialized it. Firms like Invitation Homes bundled the future rental income from these houses into a new kind of financial product: rental-backed securities. They then sold these bonds to other investors, generating a fresh wave of cash to go out and buy even more homes. Your rent check was no longer just going to a local landlord. It was now part of a complex global financial machine designed to maximize profits for shareholders. The consequences were immediate. With a focus on investor returns, corporate landlords have an incentive to increase rents and add new fees. Studies have noted that corporate landlords can raise rents at a higher rate than smaller landlords, particularly after first acquiring a property. The dream of owning a home was being replaced by the reality of a perpetually rising rental payment. Today, the landscape of American housing has been fundamentally changed. Large corporate landlords like Invitation Homes now own portfolios of over 85,000 homes. And while the largest institutions have slowed their acquisitions at times, the overall trend continues, with smaller investors now making up a huge slice of the market, by some reports accounting for nearly a third of single-family home purchases. For millions, the goalposts have moved permanently. The vast majority of Americans now believe corporate ownership has made buying a home less accessible. While it isn't the only factor, it has undeniably pushed home prices higher and shrunk the supply of starter homes, eroding the primary vehicle for wealth creation for the middle class. Neighborhoods once filled with homeowners became collections of tenants, with decisions made not at the kitchen table, but in a distant boardroom. This isn't just a story about finance. It's about the security of having a place to call your own. Wall Street saw a crisis and turned our homes into just another asset class on a spreadsheet. We want to hear from you. Have you found yourself competing with all-cash offers from faceless LLCs? Share your story in the comments below. And if you believe this is a story that needs to be heard, Subscribe for more content that exposes how the economy really works. The ultimate question remains, is the American dream now just a rental contract? When homes are financial instruments first and communities second, what does that mean for the future of our society?